yesterday had a pretty strong leg up, so a decent chance the market could have a second leg up. It could also be viewed as a large bear flag after a strong move down, so it might test yesterday's low. The most important feature of the day yesterday was this trading range into the close, and today may stay there for at least the first couple hours. First bar of the day, it traded down and then it traded up, so it's a breakout pullback. Breakout, you can draw a trend line across here. You could say it broke out above this swing high. Doesn't matter, it's a breakout pullback, but the chance of this being a strong trend from the first bar bull, I think, are not great, and I think the magnetic pull of this trading range will work against the market from going very high. So if you trade it, it's a scalp. Okay, you have an expanding triangle here, up, down, up, down, up, 3 pushes up. Expanding triangles always have 3 pushes, and there are also 3 pushes here. So I think that's a decent trade. There's room to the moving average. It's a possible high of the day. I scalped it, and then after I get out, I said, Al, it's a possible high of the day. You got to swing at least par. But that was just a mistake. Good entry bar, good follow through. When you see this bar closing on its low, small tail here, you could sell the market here and just put a stop up here. You're risking a lot, but this is pretty hard down, and it's a possible high of the day. Okay, another bear bar closed on its low, small tails. I'm not going to buy this high 2. Here's a high 1. Here's a high 2. This is going down too hard. Also, an expanding triangle usually has 2 legs down, and a wedge usually has 2 legs down, so there's probably more down. Expanding triangles often break out through the bottom of the triangle and then form an expanding triangle buy. So pretty good chance the market's going to try to come down here. Okay, the market's trying to have a sell climax, sell breakout, but it's still in the middle of the trading range. Most breakouts fail. The incidence is higher in trading ranges, so I think it's a pretty good chance this will fail. It's also 3 pushes down. The market went down and up, down and up, and down, and trying to go up. So it's probably an okay scalp. You get a bull bar. Its high is above the moving average. Its close is not, but its high is. There are 6 ticks up to this high, so I think there's room for a scalp up. You could wait for the breakout pullback to go long. Not a good entry bar. You now have 2 bars with tails. Okay follow through. This might be forming a wedge bear flag and a lower high for that second leg down. Doji is not a great signal bar. You got a little micro wedge here, a larger wedge here. It might be a lower high for a second leg down, but I'd rather enter on a breakout pullback. Okay, decent entry bar, close just above the moving average. Okay, what about buying this as a higher low? I don't like buying above a doji, and you have a reversal down here. You have a doji within a few bars. 50-50 chance the market's going to trade above the doji and then trade down some more. So I wouldn't look to buy here. Okay, market traded above the doji, closed on its low. So the market was down here. It traded up, pulled back above the moving average, and back down again with a bear bar. I think it's okay to short below that low. Now you have possibly a second entry long above this bar, and you have a short below the bear bar. So the market's in breakout mode, and I think you can trade either one or both. Not a good entry bar. Okay, you can scalp out there. Starting to get some tails, tail here, tail here, tail here. So possible micro wedge type action. A little bit more here. What about buying above here as a high 2, high 1, high 2, new low of the day? This is down 3 good looking bear bodies. I would only buy a breakout pullback. I wouldn't buy that. Okay, here's the breakout. Market might have a breakout pullback and a long. You can short below this as a breakout pullback below the low and as a failed high 2. Here's a high 1, here's a high 2. I did not short below here, at least I don't think I did. Moving average pullback, bear bar, closed near its low. So usually that's an okay short, but you're at the bottom of a trading range, so I think the risk is greater. Doji bar within a bar or two of the entry, so the market may trade above the doji and then continue down more. What about buying above the doji as a second attempt to reverse the low of the day? The market's in a bear channel, and that's just not a strong enough signal bar for you to go long there. Market went outside down, another bear bar closing on its low. You have trapped bulls. It's probably an okay short, but whenever you have a channel, a bear channel, shorting on the low is always risky because the channel can end very quickly and reverse up quickly. Okay, sell climax here. Large bear trend bar closing near its low, opening near its high. After the market's been selling off, you can argue 3 pushes, 1, 2, 3. Anyway, possible. It's a possible reversal. Okay, not a great looking signal bar. I think since it's basically a lot of two-sided trading today, the odds are very high that the market's going to come back and test the breakout point at some point today. I don't know if it'll go above it, but the odds are very high that it'll come up within a few ticks of it. So buying here is okay, especially if you're able to scale in lower. Decent entry bar, decent follow through. And what about shorting the breakout pullback? These two bull bars are too strong for me to be looking to short a low 1. I'll consider shorting a low 2 at the moving average. I'll consider buying a higher low or a lower low, but that's it at this point. Okay, this is a possible higher low, but it would have me buy up here, which is 4 points above the low, and that's asking, that's a stretch. There's room to the moving average. Double bottom, better looking higher low, room to the moving average. Good entry bar, bad follow through. Not a great looking signal bar for the low 2 short at the moving average, but it's okay. All these tails in here, the market might go sideways. Okay, the scalpers got their scalp. Double bottom, do I want to buy the double bottom this close to the moving average? The market's forming a trading range. This is near the top of the trading range. I'm not going to take it. Okay, not a good looking entry bar. Bad follow through, so there will be traders shorting the lower high, and also these longs will dump. They didn't like the entry bar, they didn't like the follow through, so they're going to exit. Okay, market went down for a scalp. Double bottom, 1 tick below this double bottom. If it breaks out below here, it's probably okay for a scalp. Okay, trying to reverse up, 3 pushes down, 1, 2, 3, or 1, 2, and then 3. I said at the time this is just too obvious, a wedge bull flag and a higher low. It's just too perfect looking. So if it's going to work, it should go quickly. And if it doesn't go quickly, then it's not as perfect as it appears. I bought it, and I got out at break even about a minute later because I wanted to see urgency. I wanted to see the market go up quickly. And when it didn't go up quickly, I didn't want to be in it. If you can scale in, you could probably buy here and scale in lower, figuring it's a trending trading range day most likely. You got an upper range, it's forming a lower range. It should test the top of the range at some point. On trades like this, I usually trade half size, and then if there's a second entry, I'll trade full size. You could also trade full size or half size on hold with a wide stop, maybe a 6-point stop, and add on the second half. And then when the market gets back up here, exit both. This first one at break